Traders, welcome back to another price action trading lesson. Today's session started with bearish trend down, which had a break new extreme. According to trendline rule, we expect correction or reversal. There was a decent push above EMA, which indicated potential bullish reversal. But notice we pushed back below the EMA. EMA is in the middle of these bars, and we have congestion. So this is no trade zone. The bars are stacked right next to each other. I cannot be taking setup in a congestion like this. It is tempting to both buy and sell at the same time. So just be patient. Let price action develop a little bit. And now the structure is getting a little bit clear and the market is giving us information. What is happening in the market? Well, I can see flat EMA for quite a while now, and we traded down, up, down, and up, and down again. So it is starting to resemble a trend range. This is what you expect going to market cycle. After break a new extreme, there can be a trend range phase before there's going to be a brand new reversal again, start of a brand new channel. So we traded down, break new low, consolidation. We can see first leg up, break second leg up, two leg up pullback, so uptrend played out with the break, move to a new extreme. Range highs are holding. We're pushing strongly below EMA, so right now what we have to apply is the trend range rules. Now we have a lower high, but the lower high is bad because there is bullish bar. Context wise good, but I cannot sell below bullish bar, and by the time you get the second bearish bar for double bar entry, it is just way too big, and overall the setup didn't form that great. But price action keeps trending lower. And now we have a new high, first attempt to go long, pull back, second attempt to go long. Now I'm not counting for attempts to go long because I want to buy. Now I want to see potential failure coming off the range highs after uptrend played out all the way down here. And the first bar after second entry long that's going to get a break below its low, there's going to be a failure. So there's going to be a break below this bar, it's going to be a failed second entry long, and this is first decent high probability setup for the day. Failed second entry long, off the EMA, downtrend is new extreme. We're most likely going to test this support, and we traded down into this consolidation. Okay, downtrend played out. Range bottom is holding as expected because the trend down is giving us weak bearish bias, but this is still quite a long consolidation, so we can apply range rules. Now we cannot buy below EMA just yet, and now we can predict why the channel expecting bullish reversal. So what's going through your mind? Failed second entry short above EMA though, but notice you're back below EMA, and by the time you get a failed second entry short, it didn't form that great because it formed mainly below EMA above this bar, so you need to wait for the second bar. And now you already have a break and you're close to these highs. So context wise, you expect failed second entry short, but it didn't form that great. Unfortunately, we can't really take it. Had there been better failed second entry short, nice above EMA, better bar, you want to consider, simply because the downtrend played out, you're bouncing off the bottom, and once again you're expecting for price action to go here, playing the trend range rules. Now shortly after, you have high-low confirmation setup of the failed second entry short, which normally is a great setup, but there's a small break new high. Now you can potentially widen the channel again, but when you're watching this live, your first channel already has a break new high. So for this reason, I had to mark it more aggressive, but you are above EMA, you need to test the resistance. But because there's a small break in your extreme, it is a little bit more aggressive. You prefer it to still be part of the current channel. Okay, you have a break, move to new extreme, even the secondary leg. And now this was quite significant push up. So you don't really want to be selling just yet. Most breakouts out of trend ranges will fail. But what if there's a bigger channel? What if there's a channel even for this leg working higher like this? Now, that doesn't mean I want to go long because it was a very healthy trend range, so this is definitely not a time to do a breakout pullback. There's no good setup regardless, no trigger here, so I'm just waiting for market to develop. Okay, horrible congestion, no trade zone again, same thing as here, and market is finally trending lower. So now it's becoming clear what's happening. You have a new high, first entry long, second entry long failure, but I don't think we can sell because it is not full at EMA. It didn't tick above the previous bar. We needed to form closer to the EMA and possible this key level. But right now, this is what you do when you're trading a trend range. Always look for these established channels and just simply follow the trend line rule and look for two-leg pullback. So you can see I have a new low, first entry short. So it's going through your mind, well, I cannot sell first entry short, so I want to see the second entry short at the EMA. And it looked like there's going to be an inside bar, so I cannot sell second entry short with an inside bar, but it didn't form. It kept working higher, and now it offered a great signal bar. So this right here is a second entry short, visual two-leg pullback, and uptrend played out with the break new extreme. This is as textbook as it's gonna get because you have new low, First entry short, second entry short. EMA keeps holding, great signal bar, great high probability setup, because why? The downtrend needs to get new extreme according to this trendline rule. Okay, we have a break in new extreme. Now we didn't fully reach the support. This is quite interesting, not really concerning, mainly interesting. Okay, so we're back above EMA. I don't think we can take high low because we didn't really reach the support. We're just kind of hanging in the middle of the trend range. No good setup anyway. Well, now we have a failed second entry short, which this is what you look for when you're anticipating reversal in the trend range. But look at the congestion. Okay, decent bullish bar, but now once again, no trade zone here. Every single time we see bars stack right next to each other like this and flat EMA, this is a congestion, this is no trade zone. I can't be taking setup in congestion. Okay, I can see that even the secondary leg has a small break and a new extreme. So when I'm watching a structure like this, I'm going to zoom back. I can see that the range highs are a little bit higher at this point. Let's say somewhere around here. The range is expanding. We can widen the trend range because the trends are getting stronger and the extremes are moving a little bit, but this is still resembling trend range. Most breakouts will fail. There is no trending structure just yet, so it's difficult for you to find a solid trend, and it's a sign that you are trading a trend range, because every single time you find a good trend, the market will pivot. So that's a sign you're trading a trend range. So you have to apply range rules. Don't follow common sense. Now you have lower high confirmation setup of the full breakout, and you're so far away from the EMA, but this is more advanced setup. I know a lot of traders like to take these, and price session wise they are great to take. I know a lot of traders really like taking these so far from the EMA. It is following the range rules. Great setup to take a chance. The market is trending lower. I'm going to redraw. Why the downtrend like this? Okay, and now we have new high first entry long, second entry long failure. We have a failed second entry long, which would have been tempting, but notice how big the bar is, and this is the tell. So you need to wait for the bar, get the trigger all the way down here, and sell directly into bottom of this trend channel line. For this reason, I don't think we can take it. Had it formed somewhere around this area, quick little first entry long, second entry long failure, but you're selling right into these lows. Notice the big tail at the bottom. I just cannot sell around this area. It just feels way too late. The bar is too big. It is getting too stacked, so I don't really think we can sell. You need some lower high, which looked tempting. Had there been break below, I would have liked it, but there was no break, so we can't enter. And at this point, it is so congested, I cannot take any setup. So once again, congestion, no trade zone. Can I go long? Can I go short? And market created another push down to this channel, but because this leg down is so significant and it's confirming the skill, this is a lot of times a sign when you see a move bouncing off the key level again that there's a brand new trend. But even this channel had a break and a new extreme. Now what do you think? Can you go long? Well, technically according to range rules, you're thinking about buying the bottom, but you also want to monitor how strong the trends are within the trend range. And we traded all the way from the resistance down here without a single touch of the EMA, and I talked about this a lot. You prefer to see trend down, broad break like this, and move to a new extreme, and then be buying or fading the breakout. Every single time it resembles one steeper leg lower like this, especially without confirmation of the EMA. There's a lot of times chance there's going to be additional leg down. So even though it worked for a quick little scalp to the EMA, I don't really like selling, I don't really like buying just yet. At the same time, we can't really sell because downtrend is small breaking extreme. So this is the area of development. Don't force it. You cannot go long, you cannot go short. Why? Because downtrend played out, but it was too strong without touch of the EMA. You cannot go long just yet. And now you finally get the broad break and new extreme. So this is what I like to see, and this is what you like to see, because the broader this break is, the more you're going to pull back into trend range because it negates any wider channel. But the signal bar here for this failed breakout is bearish bar, and we cannot buy above bearish bar. And once again, double bar entry, because your stop loss has to go all the way here below the first bar. It's quite big, so not great. Signal bar can get high low, we can't get high low, market traded up and down again. You have a small break, new high, and price action trade lower, and this is perfect. Okay, I'm gonna zoom back. What is the structure? Okay, if you are trading a range like this, your common sense will kick in and it will force you to think bearish, because you're trending lower, but trending goes against common sense. You have to look back to the left. What happened on the left is going to help you to predict what's going to happen to the right. Okay, this was a very healthy trend range, consistent price swings up and down, and we know we don't draw broad channels like this in a trend range. So disregard your common sense, focus on range rules. You're going to go back into trend range, and this is why I like these broad breaks and move to new extremes, because it negates these wider channels. So this would have been a great failed breakout. Honestly, this is a great signal bar, but this is an inside bar. Had it tick lower, and this was a regular bar, not inside bar, this would have been perfect failed breakout. You're so far away from the EMA, you're gonna pull back into trend range. This is a spike down, long break. This is exactly the scenario we like to see when we are fading the breakout. But it was an inside bar. I'm gonna mark it more aggressive, so mainly for educational purposes, but this is a great failed breakout scenario because the channel is just simply too broad. It negates the channel. Market continues to go higher. Can we get some high low for second entry short? None of this is forming. Okay, I'm gonna draw channel working higher like this. We have overshoot, so I cannot take right now any long setup because overshoot can generate stronger pullback in the opposite direction. We have new high first entry on second entry long. I cannot take because overshoot can generate stronger pullback. Can also draw a wider channel a little bit to know I'm respecting the overshoot. It broke below EMA as well. That's a good sign that there is the overshoot momentum because EMA didn't hold. We broke below, so respect the overshoot. I cannot go long, I cannot go short. Now, as you can see, the FOMC minutes. Now, minutes is not the regular conference, so you don't have to be too worried about the news, but you still want to make sure you're not trading right around the news because you never know what's gonna happen. Market was very slow. We have a break and new extreme. We have a second entry long here, which of course we cannot take. And I want to talk about this high low because I took this high low myself and I got trapped on this, and this is a bad setup to take. I'm gonna mark it, not because it is a good setup to take, because I took this setup and I want you to pay attention what we're gonna talk about, because the reason why I took it, because I came back around this time, 1308, and I took impulsive entry here because it looked like a two-legged pullback. It looked like there's a brand new channel working high like this. But what I didn't do my analysis because I just wasn't sitting here. I took a break, came back, and I rushed into this. And had I zoom back, I can see uptrend working higher, already a break, and move to a new extreme. There is no reason for bulls to go higher. There is a leg up, two-legged pullback working lower. Market likes to move in pairs of twos, and a second leg working higher. So because I didn't have time to do my analysis on time, I just got suckered in taking this high low, and I had a quite nice winning streak. So I got burned here, unfortunately, taking such a bad entry. But this is a good lesson that you need to learn, and this will happen a lot in your career. Every single time you're about to open a chart and you start trading your session, always take few minutes before you're gonna place any setup, because I used to do this mistake even back then when I started trading. Every single time I came in late and the session started, I was so eager to trade that I jumped on the very first second entry and I didn't even draw my channels and key levels properly. And this will happen to you when you come from school, come from work, or maybe from some meeting, etc. You've been out with your friends and you come back to trade and you will rush it. Always make sure you're gonna be calm. You're gonna analyze the chart for 5 minutes, draw these key levels, think about the structure. And this is the kind of methodology I use when I'm drawing channels. I have this rule where it will mainly affect you when you are trading a trending market, because it's easy to draw a channel too broad when you come late and you fast forward and you rush your analysis. Okay, because when you're trading a trending market, you are kind of frustrated that you miss the move, you miss the trend. There's a break in your extreme, but you don't care because you will widen the channel because you want to still be part of the trend, and you refuse to admit that the trend may be over and you miss the party. Okay, so when you're trading in a trending market and you're looking for channels, when you're drawing the channels, always apply the rule that you want to draw these channels as if you would be watching them to develop live. Go back to the beginning of the trend and draw these channels as if you would be watching this live. For example, it doesn't really fit that well on a trend range day. But let's say I'm gonna come here and I'm gonna see the high low and I'm gonna draw a channel like this, broad like this, and I'm gonna think bullish, okay? But when I'm watching this live, this is what I'm observing. I'm observing the small trend starting from this point, first leg up, break, and a second leg to a new extreme. So the trend played out and we can have reversal. So every single time you come a little bit late and you want to rush your channels, always use the rule that I use. Draw the channels as if you would watch them develop live, because a lot of times you will see the channels are actually much tighter, they're not that broad, and there's a break in your extreme and you need to respect the market cycle. So I took a losing trade right here, but the uptrend played out with the break new high. So what I'm gonna do, I'm gonna redraw short-term downtrend working lower, something like this. Actually, this is a little bit too broad. I'm gonna start it from this point like this. We have a new low, first entry short. The second entry short is so far from the EMA, I cannot take it. Okay, market keeps trending lower. We're breaking above EMA, so I cannot sell. I need to respect this uptrend. The downtrend needs to get new extreme according to trendline rule. Okay, new high for the entry long. Can we get a failed second entry long below EMA to new extreme? And by the time we get a failed second entry long, it's too far down, not at the EMA, and basically, yeah, creating almost new extreme, and market is about to close. So this is the overall structure for today. This would have been great failed breakout had there been better bar. There were really no good setups here, but the first part of the day offered a lot of good setups. This was the textbook setup of the day. Every single day, it doesn't matter how choppy it is, there are a few good easy high probability setups, and overall very healthy trading range. As you can see, just up and down, up and down. You have to make sure you're really training yourself to follow the range rules and trust price action and disregarding the common sense, because common sense is not helpful in trading. It's going to force you to do the opposite that you need to do, which is buy low and sell high. So I'm going to wrap it up. I hope you had a good trading day. I'm going to talk to you next time. Good luck with your trading.